Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, December the 18th at about 12:45 p.m. Eastern. Now, before we go on, I want to wish you and your loved ones a very joyful Christmas, happy holidays, and certainly a healthy and prosperous new year. And now on to the market. Wall Street retreated from record highs yesterday today as a coronavirus stimulus deal remained in focus ahead of a weekend deadline. So we'll see what happens there. And while Tesla shares hit their highest in anticipation of their addition to the S&P 500 on Monday. Markets are likely to see increased trading volumes this afternoon due to the expiration of stock index futures, stock options, and single stock futures. This occurrence happens 4 times a year, and it's known as quadruple witching, and it always adds volume during the afternoon session. And of course, we've got a lot going on with the stimulus package still being talked about, and again, Tesla shares being added to the S&P 500. So all very exciting, and we'll see how the market closes a little later on. So now let's look at 3 charts that could give us some insight into the week to come. As we always do, we're going to look at our daily chart of the S&P 500 SPDR, symbol SPY. This is the ETF that closely follows our benchmark index, the S&P 500. Now, on Thursday, which was yesterday, on Thursday, January 17th, if you can see right here, the SPY made yet another new all-time closing high. It's been doing that a lot lately. This came in at $372.24. It has slipped a bit south since then, and as I was capturing this chart today, the SPY is trading at $369.11, just off those highs. Now, the red line you see on this screen is the 20-day moving average. It's a relatively short-term moving average, at least it's considered to be that. And you can see here how the SPY, since it jumped up in October from down at those lows about 320 or so, the SPY jumped up and now is kind of using that 20-day moving average as a support line, as a trend line at the current moment. And we do now, our resistance, since we have a new all-time high, is now at that high at about 373. And so we'll look for support here. Now, support, potential support, we have to call it, will be that 20-day moving average, and that's coming in now at $365.93. So we're very close to that. Of course, the green line, the simple 50-day moving average, is down here at $354.28. That could offer potential support should the SPY start down here. Then, of course, we have these lows in September and October that came in right around 320. And we have the 200-day moving average, which has been kind of wandering along horizontally here until recently it started moving higher. And it's coming in at $318.48, or about $31.84 on the S&P 500 itself. So again, we're going to have a lot going on, certainly in the coming week. Now, of course, the market likes to go up. The market likes to go up before a holiday, and next Friday will be Christmas Day. So it will be interesting to see if the SPY can stay above the 20-day moving average next week. Of course, the market will be closed for Christmas Day, and it will be a holiday shortened week, we call it. So it'll be interesting to see if this market, which has been so strong, although it's been kind of moving sideways, consolidating, then moving up, but definitely up, making new all-time highs all the time. So it'll be interesting to see what this market can do the week before Christmas. As always, please trade wisely, and please, please, please keep your protective stops in place. Our next chart is a daily chart of the Invesco QQQ, As you know, this QQQ represents the Nasdaq 100, a major index in the market. And of course, the top holding of the Qs are Apple, Amazon, Facebook, Alphabet. Did I just say that? The QQQ also made a new intraday closing high this week, Thursday, the 17th, which was yesterday. And it made that new all-time closing high at $311.98. We always use closing highs for important highs because it's really, that's where the rubber meets the road. Will traders hold positions overnight through the close? And that's why the close is always more important. The all-time high closing price is always more important than just the high of the day, which could have been an intraday high, like we're seeing today, and possibly then see it close down from there. So the close is the important part of the trading day, and that's why we use all-time closing highs to state for that particular asset. So when I captured this chart today, the QQQ was trading at $310.21, obviously under 311.98 from yesterday. Now, the QQQ has also been walking very nicely up its 20-day moving average, very, very nicely. You can't argue with what it's doing here. And so we're going to have overhead resistance up here now at 310, 311, and we will have support coming in, potential support coming in where this 20-day moving average is coming in right now at $302.50. The 50-day moving average could also provide support at $292.54. So all along here, we have nice levels of support down around 290, where the 50-day moving average is up a little higher. And then, of course, down here, we have this medium-term trend line coming in, and that's we have that down here at these lows around 270, 267, 260, right in here. And I forgot to mention, this can also act as a support low down here at about 297. So lots and lots of potential support should the Qs come down. Now, I am going to tell you something. I went through, oh gosh, probably 200 indexes today, at least 100, while I was researching. And I'm going to say that 80% of these different sectors and industry groups that I went through are way, way, way overbought. And that means that if we look down at the 14-day RSI down here, Relative Strength Index, this line right here that I'm drawing, this is the 70 line. That means that if price moves up and over that 70 line, we call it overbought. And that means that too many people own what, basically it means too many people own whatever that is, and that at some point, maybe not, at some point, short-term traders are going to come in and take profits. And if the line trades over the 70 line, this RSI line you see right in here, over the 70 line, it becomes overbought. Now here's an example back here, look left on the chart with me, of what I'm talking about, a line about the RSI line moving above the 70 line and becoming overbought. You can see how it actually moved above it. Today as I went through, oh gosh, I don't know how many, but at least 100 ETFs representing sectors, and then of course ETFs in their industry groups. Chart after chart after chart came in with the RSI up over the 70 line. And you look here what happened, look up when you see what happened when and just in this case, when the QQQ came up here, made this pivot high, and of course at the time it was the all-time high for the Qs, and the RSI came up and moved up over the 70 line. Within a few days, the Qs are pulling back. Was it huge, dramatic, and punishing? Not too bad, but it was certainly occurred. And so I am paying attention to this RSI line down here on all of the ETFs that I'm looking at. So we will go on to the next chart here, and I'll talk about it some more, but just do be careful here. Now, the QQQ on this chart isn't totally overbought yet. It hasn't moved up over the 70 line, but let's watch it and see what happens as we move into Christmas holidays. Now, this RSI line can stay close to overbought below the 70 line for quite a long time, and we can see how that happened. Actually, it's been happening most of the year here, but at some point, profit taking begins. Remember, the financial markets of industrialized nations move in cycles. They do not move straight up or, please Lord, straight down. So we do move in cycles, and I just wanted to present this information to you, just to tell you to be wise and be careful. Okay, so for saying that, we're going on here to the daily chart of the Global X Silver Miners ETF, and the information we just talked about the RSI and about so many of these exchange traded funds being in an overbought position. The Global X Silver Miners ETF is not yet in that place. It has not gone over that line, that 70 line that I just talked about, gave you the example on the QQQ. If we look left on the chart here, we can see in July where the SIL did go up and over that 70 line, and of course we can see then the subsequent fall here. Now, just talking to you about a lot of the technology ETFs, just so many are overbought. So what I'm saying is finding a good entry has been a little challenging right here. I don't like to buy high and sell low. That is not what I'm about. So I am willing to be patient here. If we do see any inflation coming in, I think silver might be a good place to have at least a little bit of exposure. So let's look at the Globex Silver Miners ETF here, daily chart. It has 41 holdings. Top holdings in the SIL include Wheaton, Polymetal, Hecla Mining, Core Mining, Pan American Silver. And when I captured this chart today, the SIL was trading at $45.97. Now, you can't see it on this chart, but I've been telling you the all-time highs of any ETFs here I've been putting up as our third chart. The all-time high for the SIL, came in at 94 in April of 2011. So is it 94 in April of 2011? Please keep in mind, however, that the SIL started trading in April of 2010, so we don't have any information before that time. Now, coming up here to more recent times, the SIL did sink to a low here of 16 in March, when everything else fell, of course, with it. And then it immediately started up a nice V-shaped rally here. It started right up, moved over the 20-day, the red line moving average, then over the 50-day, the 200-day, and actually made a very nice run up here to, oh gosh, I think it's about 52 here in August. So then it's pulled back, because that's quite a run for anything to make here, much more than 100% run here. And then it started pulling back, and it's been moving in a downtrend. Actually, we can see the lows here moving lower, the highs moving lower. Now, gold and silver, and even these miners, do not trade in the most orderly charts ever, but they certainly has enough volume to keep it going. Now we can see how the SIL has moved down and then finally made a higher low here, which I like, and coming up to penetrate the 20-day moving average, which is now below the 50-day. They are inverted right now. Of course, that will change if the SIL keeps moving higher. So it moved up here, made a higher low earlier this month, and higher low than this low, which is always a good thing, and then started moving higher. So again, it is now trading over the 20-day moving average, the 50-day, and has now moved up to $45.97, which is where it is now. The RSI is not yet overbought. I actually would like to see the SIL pull back here a little bit. It wouldn't bother me at all if it did. As long as it stays above the 50-day moving average, I'm happy. And that average is coming in right now, that line at $43.52. At any rate, if it can remain positive in the coming week, and if it can remain above the 50-day moving average at $43.52, I may enter a small position into my trading portfolio of the SIL. My initial stop is going to be down here just below the 50 and the 20-day moving average at $42.10. Now, if the SIL can, and it won't go in a straight line, I don't believe, but when and if it gets above $48.50, and basically what I'm looking at is this prior high here. So if it can climb up and over $48.50, at that time I will probably add more shares to my trade. Again, my initial stop is down here at my initial stop is down here at 42.10, and of course by that I will have changed my stop into a trailing stop, a little tighter, that will follow this up. So we'll see what happens next week. You may want to keep an eye on the SIL. And now, before we go on to final thoughts, please know that if you'd like to become a more successful trader, this is a great time to check out my trader training programs. You will love my powerful strategies devoted to swing trading, trend trading, bottom fishing, and many more. My programs are easy to understand, and they can help you increase your gains quickly and easily. To see of all of my online training programs, simply go to the link on this screen or click on the orange button below. And now on to some final thoughts. Ask yourself this: do I often take trades and then suffer regret or begin second guessing them immediately after I enter? Do I suffer regret or start second guessing my trades right after I enter? When we second guess our trades, we can immerse ourselves in a mire of stress, and that's exactly what it causes. This isn't good for our trades, it's not good for our account, and it certainly isn't good for our well-being. Many times when we regret entering trades or we start second guessing, it's because we were not sure of our plan, or we didn't have a plan, or we're not sure of the market's next direction or our evaluation of it. So when we overthink our trades or second guess them, it obviously results from fear of losing money or fear of being wrong. Fear of being wrong. A lot of people have that fear. What's more, if you enter a trade and then ponder all of the reasons you could or should have entered a different trade, that causes a lack of self-confidence. And if you trade with a lack of self-confidence, you often make some big mistakes. So to stop second-guessing our trades, we have to rewire our thinking. We have to accept that occasional losses are part of the game. So if you get in and go, oh, no, I'm going to lose money, then a lot of times you make a bad decision. Please know that occasional losses are a part of the game. And if our plans are all well thought out and match the current market environment, our wins will wipe out our losses and we'll have a net profit. A net profit. As a trader, you just want to make more money than you lose, but losses are part of the game. Finally, if you constantly suffer from immediate regret or second guessing your trades, try this. Enter according to your plan, and of course, make darn sure you've got a plan for every trade before you enter. Then, once you've entered the trade, place automatic stop orders with your broker. We call that hard stops. That way, the appropriate decisions are in motion and you can relax into yourself, because if you need to get out of that trade, your broker will take you out of it automatically. That makes a big difference. You can relax into yourself and relax into your trades. A much, much, much better way of trading. So, finally, if you'd like to become a more successful trader, check out my trader training programs. My simple yet powerful strategies will help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen or click on the orange button below. Until next time, Merry Christmas, Happy Holidays, keep green on your screen. I'm Toni Turner, and this is The Market Now.